One of the factors that has contributed to higher-than-average jet fuel inventories in the United States is the rising jet fuel production by refineries. Jet fuel is a byproduct of crude oil refining, and when the demand for gasoline and distillate is high, refiners process more crude oil and produce more jet fuel as well. This was the case in summer 2021, when jet fuel inventories reached multi-year highs. However, since the beginning of 2021, air travel has also increased significantly, as more people resumed flying after the COVID-19 pandemic restrictions eased. According to the Energy Information Administration, EIA, jet fuel demand has been within 20% of 2019 levels in most weeks since mid-August 2021, compared with about two-thirds of 2019 levels in November 2020. This increased demand, along with reduced production due to refinery outages caused by hurricanes along the Gulf Coast in August 2021, has caused jet fuel inventories to decline. As a result, jet fuel inventories fell below their 5-year average in September and November 2021, and below the 5-year low during the week ending November 26, 2021. This decline in inventories has also led to higher jet fuel prices and crack spreads, the difference between the price of jet fuel and crude oil, which reflect the profitability of refining jet fuel. The EIA expects that jet fuel consumption will continue to increase as air travel demand recovers, but it will not reach pre-pandemic levels until 2023. The COVID-19 pandemic has had a significant impact on the demand for petroleum products in the United States and around the world. As people traveled less by road and air, the consumption of motor gasoline and jet fuel dropped sharply, while the demand for distillate fuel oil, which is used for heating, power generation, and diesel vehicles, remained relatively stable. How did refineries adapt to this changing market situation? According to the Energy Information Administration, EIA, refineries changed their operations in two main ways: they reduced their overall refinery runs and they changed their product yields. Refinery runs are the amount of crude oil and other feedstocks that refineries process into finished products. Product yields are the percentage of each product that refineries produce from their inputs. In April 2020, refinery runs were 22% lower than the 2019 average of 17 million barrels per day, B/D. In May, they were 21% lower than the 2019 average. These reductions largely matched the overall declines in demand for finished petroleum products in those months. However, demand for motor gasoline and jet fuel was disproportionately affected by travel restrictions and other measures that were in place throughout much of the United States starting in late March. Therefore, refineries changed their product yields to produce less motor gasoline and jet fuel and more distillate fuel oil. In 2019, refinery yields for motor gasoline averaged 46%, distillate fuel oil, 30%, and jet fuel, 10%. In April 2020, refinery yields for motor gasoline fell to 41%, and jet fuel yields fell to 5%. Both values were the lowest in EIA's monthly data series for refinery yields, which dates back to 1993. In contrast, distillate fuel oil yields increased to 38%, their highest value on record. Refineries can change their product output by running downstream units differently. Downstream units are units that process the output from distillation units, which separate crude oil into different fractions based on their boiling points. EIA surveys the amount of material, referred to as fresh feed, that runs through 4 types of downstream units: catalytic reformers, catalytic crackers, catalytic hydrocrackers, and cokers. Catalytic reformers increase the octane rating of gasoline by converting low-octane naphtha into high-octane reformate. Catalytic crackers break down heavy gas oils into lighter products such as gasoline and distillate. Catalytic hydrocrackers use hydrogen to convert heavy gas oils into high-quality products such as gasoline, jet fuel, and diesel. Cokers convert residual oils into lighter products such as naphtha and gas oils, as well as solid coke. In April and May 2020, fresh feed to catalytic reformers and catalytic crackers decreased by 25% and 24%, respectively, compared with the 2019 average. This indicates that refineries reduced their production of gasoline by processing less naphtha and heavy gas oils. Fresh feed to catalytic hydrocrackers decreased by 14%, suggesting that refineries also reduced their production of jet fuel by processing less heavy gas oils. Fresh feed to cokers increased by 2%, implying that refineries increased their production of gas oils that can be used for distillate fuel oil. These operational changes reflect how refineries have responded to changing demand for petroleum products during the pandemic. As demand recovers, refineries may adjust their operations again to meet market needs.